Good afternoon, ladies and gentlemen. Welcome. I am the Crypto Crow as we break out of a downward channel that started basically at the peak of Bitcoin. We could be heading towards a reversal. Typically Wednesday in the week for Bitcoin is when we set a price reversal, kind of the opposite of what starts on a Monday, right? So 9:30 a.m. Eastern Monday, we start going in one direction or the other. And by Wednesday, we typically turn around into Friday, and then all of the market makers leave and retail market takes over for the weekend. Whatever happens, and then we just kind of reset and restart on that Monday. So, I'm feeling pretty good about things, but ultimately, we could be going a little lower. I mean, we could see, 59,000 in Bitcoin, but we'll see. There's so much happening, and we're going to be covering some Cardano news. Some of it you've already seen, I'm sure, and some of it you probably aren't aware of yet. And then we're going to cover some, an indicator that I use a lot, and I kind of reference to give us kind of a little bit of an idea as to where we are in the market cycle. And then we're going to be looking at some Bitcoin ETF data that I think is very relevant to what's going on right now. So we're going to go ahead and dive into this. Let's get started with some of the basic news. And then I'm going to be going live with Cardano's Paul here pretty soon. So probably after I record this video, you're going to see me live with him. I just watched some videos of his this morning and I'm like, this guy's pretty good. I like this guy. I like his accent too. Kind of wish I had an accent, but anyway, moving forward, here we go. So Cardano markets, Cardano finally launches its stablecoin USDM. So a lot of people have been complaining about there not being a stable token on the Cardano blockchain, and now there is one. And this is put out by Mehen official. I would suggest following them. These are some pretty long-term pros in the finance sector. And I think ultimately this is a very, very bullish thing. This is a company, a group that I actually think is looking pretty trustworthy. And but the problem right now is that there still isn't a whole hell of a lot of liquidity behind USDM, but I expect that to grow fairly rapidly as we move forward towards the halving and beyond. So keep your eyes on what's going on with USDM. You wanted it, you got it. Now start using it, people. Like, start adding to the liquidity if you can. Like, do whatever you can to start building this thing up so that it's more of a universal stable token. And but you've already seen all of the news on that, so I'm not going to dive into that super deep. Cardano's active addresses hits a new peak as Toncoin and Nugget Rush lead the altcoin market rally. This is on the 20th. This came out this morning. Cardano's number of active addresses has hit a new all-time high of just under 600,000. And basically active addresses ultimately means the number of addresses that have had activity within the last 24 hours. This doesn't mean long-term holders. This doesn't mean active addresses that are holding Cardano. It just means basically the number of people that are active in the Cardano ecosystem over the last day. So that's a pretty significant number, 600,000 basically, and that looks pretty good. There's not much else to that, but I just want to let you guys know there's a lot of activity going on in the Cardano ecosystem. Now, this is the Pi cycle top indicator. You need to Google it. Look into bitcoin.com. There's a lot of really good charts and data here, but this in particular is one that I like to watch, especially as we start moving towards the halving and into the bull market, because many of you will know back on April 13th of 2021, I called the peak of the Bitcoin market, and everybody thought I was crazy. This is what I was referencing when the market peaked, because ultimately when these cross over, when this orange line crosses up over into the green line, that's typically indicative of the market peak. Now, people said, but you didn't just call the peak of the market, Crow, and it's kind of crazy to just use one indicator. Well, it wasn't just about the Pi cycle top, honestly. It was about timing. It was about a lot of different things, but this was the main catalyst for what triggered my call there. And then you might say, but you called a double peak market, Crow. How did you know it was a double peak market? That's crazy. There's no indicator for that. No, there wasn't. And ultimately, like I've said in many videos in the past, that I based that off of a lot of Wyckoff accumulation distribution, trading mechanics that I was seeing, and how it paired up almost identically to the NASDAQ of 2007. And the lines just matched up. And I thought, you know what, as the institutions are taking more interest in Bitcoin, that's basically what I'm seeing. And I called it, and that ended up being very accurate as well. But if you look, we've got a pretty decent spread here. I mean, for some time, we've got some time. You can see here, if we were to gauge this, and one of these days I'm going to pull this into Photoshop and I'm going to measure it out exactly just to get a better idea. But I would suggest that we are somewhere close to this area. This is October 27th of 2020. Price of Bitcoin was 13,676. Okay. And we had a plenty of space to grow. So from October all the way to, April of 2021, that's how much time we had before, where we're at now and where the proposed peak may be. And according to this, we are definitely going to break $100,000 in Bitcoin by the time these cross over, especially given the fact that we're probably going to be somewhere up here where my mouse is, or potentially where that camera is. I believe that we're probably going to hit somewhere around $200,000 to $250,000 in this next market. Why? Because of the ETFs. Why are the ETFs a big deal? Well, you can see Bitcoin ETF tracker. This is on blockworks.co. If you want to keep an eye on what's going on in these ETFs and who's doing what their fees are, you can see the GBTC with Grayscale is 1.5% in fees. And they've claimed that they're going to lower their fees over time, but how long is it going to take until their fees are in line with a lot of these others? Okay, you're talking fractions of a percent. You can see EZBC, Franklin Templeton, their spot ETF is at 0.19%, but they're not as big as a lot of these others. Well, the competition is heavily flowing. Okay. Van Eck spot Bitcoin ETF sees record $119 million inflow after a fee cut to 0%. Take that in for a minute. You're basically able to buy into a spot Bitcoin ETF at 0% right now until they have reached $1.5 billion worth of assets under management. So people that are in GBTC right now at 1.5%, they're going to go and they're going to look at Van Eck and they're going to say, well, you've got until they are, they're basically going to be at 0% until they hit $1.5 billion in assets under management. And this is, the custodian is Gemini, which is a US-based, US regulated exchange. And so I'm actually pretty bullish on that. But yeah, Van Eck, Bitcoin Trust, they entered the market at 0.25%, but they lowered their fees. And this news was back on March 12th. So this is a recent change. They're basically saying, we want to be competitive. We want the volume. We want to manage these assets. We're willing to basically do that at 0% until they reach $1.5 billion in assets under management. So you've got $1 billion to go until the fees go up. And even when they do go up, even if they just came back to 0.25%, listen, it's still extremely competitive. But all of these Bitcoin ETFs are basically gobbling up everything that Grayscale's GBTC is doling out, right? And we can see that on these charts here, where basically these companies are gobbling up everything that GBTC is spitting out. And you can see here on the far right, this is GBTC Outflow. Okay. And you'll see March 19th, March 18th, they have dumped more Bitcoin than ever. Okay. Than in the history since these other ETFs kicked off. This is why we're seeing such significant price action in the market. And a part of the problem is when they're dumping record volumes into the market, okay, because every time somebody leaves GBTC because the fees are too high and they want to transition into another vehicle, or they just want to cash out because we hit a new all-time high, and some of these people that were caught in GBTC are like, all right, I'm going to take my profit, I'm going to get out of this, I'm going to stop paying these fees, and then maybe I'll re-enter under some of these other ones. This is what we've been seeing and what has been moving the market from the recent all-time high of Bitcoin to where we're at now at 63,777, right? And so the thing is that here on March 18th and March 19th, we're seeing these outflows of Bitcoin, but we're seeing it at a deficit because the other ETFs are not buying as much. So as the price is moving down, demand goes down. Right. So that's ultimately what we're seeing here, folks. This isn't anything necessarily to go crazy about, but this is ultimately what we're seeing. We're seeing the transition out of GBTC into like the VanEck and the BlackRock and all of these other spot Bitcoin ETFs. But because the price has been moving down and the outflows of GBTC are going up as people are taking profit from the new high, we're seeing this kind of trifecta of effery, as I usually call it. And it's basically been moving that price down. And then, these other ETFs, because the demand at the moment isn't as high as the outflows of GBTC, well, we're getting that spillover and it's pushed the price down. That's it. That's all it is. And typically when Bitcoin does that, the altcoin markets follow because, people are taking profits, they're moving money around, they're doing this and that. So, and only a couple other times, March 1st, it looks like February 21st, did we see there being a bit of a deficit, 35.7 Bitcoin, 139 Bitcoin deficit. And so that is typically when we see the price start to dip a little bit in Bitcoin's price action. And that's really all there is to it. And it's, I'm not really concerned about anything that's going on. I think it's actually kind of healthy. But ultimately, we're going to continue transitioning away from GBTC because even if they plan on lowering their fees, it's not going to happen anytime soon. It's not going to happen fast enough compared to where a lot of the other fees are in a lot of these other spot ETFs. So we're going to be seeing those prices move. And what ultimately is going to happen, like right now, we're sitting at a little bit of a sideways spot, right, in Bitcoin's price. We're going to go ahead and take another quick look at the price action here. So this is my Fair Desk account, and I'm not in a trade right now currently because I'm not quite sure exactly what's going to happen. But looking at this on a 5-minute, actually, let's go to an hour. Let's take a look at an hour chart real quick. So looking at an hour chart, you can see how where we peaked out and then we just started to move down. Okay, so this has been a downward channel for a while. We broke above it a bit, but we're still in this descending channel. Now, we're seeing these moving averages on an hourly candle. We're seeing that the price is basically bouncing down off of this, which means we could correct even further and go down to new lows. We could see a $59,000 Bitcoin price point. But as that liquidity is basically doing its thing, right? We're getting rid of a lot of the longs as the price continues to move down, and we're following the market makers up and down on all around. But ultimately, what I think is going to happen is we're going to reach a point of exhaustion, and when the GBTC and all of that stuff starts to leverage out, then we're going to see some sideways activity. We're going to see a consolidation trail. And then from that point, we're probably going to see a significant bounce, because what's going to happen is the people that have exited GBTC because of their fees, they're going to want to re-enter the market. When they re-enter the market, they're going to go into some of these other funds. When they do that, that's going to cause them to buy back from the exchanges, which is going to push the price up. The momentum is going to start getting bullish. Everybody's going to say, oh, we're starting to move back up. I'm going to get back in. I need to get back into the market. They're going to do that. And then we're going to start seeing that FOMO push the price even higher, higher, and higher. The thing of it is that all of this stuff going on with these ETFs is ultimately what has pushed the price to new all-time highs before the halving. This is the first time we've ever seen the price actually move quite like this before a Bitcoin halving. Once the halving hits, well, we're going to go from basically, 12 times the Bitcoin that's being mined today. I mean, it might be 24 times. If you don't think that's going to send that price going absolutely bonkers, I mean, I don't know where you've been. But that's ultimately what we're seeing. And, I have a lot of friends that I've been, getting more involved, and I'm trying to help kind of understand the crypto market, how things work and this and that. I have this PDF magazine guide that I created specifically for newcomers that want to understand all the little nuances, all the different elements of the space, from NFTs to DeFi to meme coins to, what is Bitcoin, what is Ethereum, what is Cardano. And, Cardano, I think, is absolutely going to sweep a big chunk of this market as we continue to move. And, there's so much more. There's going to be a lot more coming. I'm going to touch on a lot of that stuff tomorrow, I think, in tomorrow's video. So just know there's a lot of stuff happening in the market right now, but it's just a lot of transitioning, and it's just kind of shaking the market up a little bit, which I think is very healthy. We have things in place for this market cycle we've never, ever had before, and it's just going to tear these charts up. I mean, I definitely see a $200,000+ Bitcoin coming sometime in the late 2024 or 2025. I've seen some people say that, this market might go to 2026. I think that is kind of a seed being planted for people to consider the idea that maybe we don't drop the way we're used to seeing Bitcoin drop because of these ETFs. And there's going to be more. There are probably going to be some Ethereum ETFs and some Cardano ETFs. And we're going to start seeing a lot more of that as the institutions do everything they can to try and basically get a piece of all of the activity in some of these top level, high market cap crypto assets. And whether that's good or bad, we'll see. But ultimately, it does mean a lot more control over the markets and the way the markets move. And I think that we're going to get to a point where, as these big institutions are buying into these ETFs and they're buying into Cardano and they're buying into Ethereum and whatever else, we're going to start seeing the tokenization of real world assets. And that's also going to play a significant role. I believe that is why a lot of these institutions are getting into starting these ETFs to begin with, because the inflow is going to be in Bitcoin. When somebody does really, really well and they make a lot of money on Cardano or something, in 2024, 2025, some of these people are going to be putting that money into Bitcoin, and that is going to become the store of value. And they're going to ride that change out because, it's something that I might be doing myself at some point. It's just continuing to accumulate more Bitcoin over time, using the ebb and flow of the altcoin markets and the profitability of those. Because let's face it, we're not going to get a 10 or 20x in Bitcoin right now, but we could very easily get a 10, 20x in the altcoins. So even if I just took a percentage of my profit, accumulated more Bitcoin for the 2030 market, let that ride out. Even if it goes down, which it probably will, but we don't know, because we might not see these big dumps that we're used to seeing in these previous cycles, but we'll at least have that is when I think Bitcoin's true store of value is going to become very, very, very apparent. Because right now, when you can peak out and then drop 82% over a year in a bear market, I don't think these institutions are going to really allow that to happen. And I think what's going to happen is a lot of these institutions, especially those like BlackRock, who have the power to kind of initiate the tokenization of real world assets such as real estate and the traditional stock markets and pension funds and this and that. What are they going to do? They're going to control the bulk of these assets so that they benefit from the tokenization of all these real world assets, because it's going to become the primary store of value for basically everything that happens in the world. I'm telling you, this is going to be crazy. This is going to be an absolutely crazy market. Many, 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 many new multimillionaires will be made. And hopefully we're all here to gather with each other and learn from each other and be a part of the ride together. So until next time, guys and gals, crow your coins. I'll see you soon. Thanks.